If the United States launches a retail digital dollar, what changes first? Global finance or the daily choices of a typical American? In 2025, the digital dollar is no longer a distant idea. It now sits at the intersection of national strategy and personal freedom. A digital dollar could mean instant tax refunds, real-time social benefits, and payments that settle in seconds. But it could also mean unprecedented visibility into how Americans spend, save, and move money. This video explains what is happening and why it matters to both policymakers and ordinary citizens. The shift toward a digital dollar did not begin in Washington. It began when payments migrated from cash to cards, from cards to mobile apps, and from mobile apps to decentralized financial infrastructure. By the late 2010s, China's digital yuan pilot reached millions of users, creating the first large-scale state-backed digital currency system. At the same time, stablecoins in the United States processed billions of dollars in daily transactions, proving that the demand for programmable and instant settlement was real. As global finance moved from analog to digital, monetary authorities realized that traditional systems could not remain static. The debate over a retail digital dollar is part of this longer arc, the modernization of the world's primary reserve. Quick reminder, hit subscribe if you haven't already. Let's keep going. Between 2023 and 2025, three developments pushed the digital dollar to the center of United States policy. First, private stablecoins reached transaction volumes comparable to mid-sized banks, raising questions about consumer protection and monetary control. Second, cross-border payment delays became a strategic vulnerability. Settlement times measured in days are incompatible with real-time financial markets. Third, global adoption of central bank digital currencies accelerated. The digital yuan expanded to international pilots, and the European Central Bank advanced its digital euro project into a preparation phase. These events forced a turning point. The question is no longer whether digital money will expand, but whether the United States wants its version to lead or react. Three core forces shape the debate around a United States retail central bank digital currency: control, competition, and convenience. Control. A digital dollar could strengthen monetary policy by enabling direct, fast transfers. For an average American, this could mean emergency relief arriving instantly, rather than waiting days for checks. But it also raises the possibility that every transaction becomes traceable, creating fears about government overreach and financial surveillance. Competition. A retail central bank digital currency would compete with commercial banks and stablecoins. If citizens shift deposits away from banks, loan availability, mortgage pricing, and credit conditions could change in ways that reach directly into households. Convenience. For consumers, a digital dollar could eliminate payment delays, overdraft fees, and transfer friction entirely. For small businesses, it could mean faster settlements and fewer intermediaries. Yet this efficiency comes with a trade-off. The more seamless the system, the more centralized its control. A retail digital dollar, therefore, is not just an upgrade to payments. It is a redesign of the relationship between citizens, banks, and the state. Before we continue, make sure you're subscribed. It helps the channel grow and keeps you updated on every new analysis. Looking ahead, the debate suggests three plausible futures for the digital dollar. Baseline path, controlled exploration. The United States expands pilot programs but avoids a full public rollout. Legislators demand stronger privacy guarantees, and the digital dollar remains experimental. Traditional banks retain their central role. Acceleration path. Retail launch by 2026. Congress authorizes a limited retail central bank digital currency with strict privacy protections and caps on holdings. Cross-border pilots begin with allied economies. the digital dollar becomes a competitive alternative to stablecoins. Fragmentation path. Private money dominates. Political resistance blocks a retail central bank digital currency. Private stablecoins and tokenized bank deposits grow rapidly. The Federal Reserve retains oversight, but digital money becomes a hybrid public-private system. Each future reflects a different answer to the same question. How much of the financial system should be public, and how much should remain private? 3 deep risks define the transition. First, concentration risk. If citizens shift deposits into digital dollars, liquidity could centralize at the Federal Reserve, shrinking bank balance sheets. Second, cyber infrastructure risk. A digital dollar would require a resilient system capable of supporting national-scale transactions with military-grade security. Third, political governance risk. A state-issued digital currency must balance financial integrity with civil liberties. Without robust legal safeguards, trust erodes and adoption collapses. These risks are not technical details, they are constitutional design choices. The digital dollar debate is not simply about technology. It is about the structure of global power, the nature of money, and the balance between privacy and monetary control. If the United States launches a retail central bank digital currency in 2026, the global financial system enters a new chapter. If it hesitates, others may write that chapter instead. If strategy, history, economics, and finance shape the world, this is where they converge. Subscribe now and join the conversation.